Have you ever wondered whether Tesla stock is a buy right now? After Tesla released production and delivery numbers, experts have been at odds as to whether or not Tesla is still a buy. And if you want to know the answer to this, you surely would not want to miss this. There never seems to be a quiet time at Tesla, particularly when it comes to its controversial CEO Elon Musk. Whether he's launching mini satellites into orbit to expand his space-based global internet service, or opening a new auto manufacturing plant, or announcing a new version of a Tesla electric vehicle, or making more noise with his Twitter bid, Musk is almost always on the news. Do you want free stocks? Then listen up. Moomoo developed a new function, the industrial chain. Suppose you want to find out the stocks that have the potential to fluctuate in the upcoming days or months. The industrial chain will help you a lot. It provides a detailed picture of the trending industries such as semiconductors and EVs. You can quickly find stocks either upstream or downstream, which helps you focus on target segments of an industry more quickly. Also, as segments are related to industries, you could predict price fluctuations faster without reading many research reports to determine the relationships within one industry. Link in description. During Tesla's annual shareholders meeting in August, Tesla CEO Elon Musk stated that Tesla's strongest competitive advantage may be manufacturing efficiency. However, he also said one of Tesla's greatest long-term opportunities may lie in robotics powered by artificial intelligence. Tesla could achieve a production run rate of 2 million vehicles by the end of this year, and he reiterated the goal of 20 million vehicles by the end of the decade. For most, Tesla might seem like a pricey stock in terms of valuation, but the company has delivered huge earnings and revenue growth for several quarters in a row. Also, annual earnings estimates show the company's growth trajectory is still very much intact. In the second quarter, Tesla announced that it had delivered 254,695 electric vehicles globally in the second quarter. That fell 18% from the previous quarter and missed fact-set estimates of 264,000. The slowdown was partly due to an extended coronavirus shutdown in China. Constraints around opening manufacturing facilities in Austin and Berlin took their toll too, but the deliveries were up 26.5% from the year-ago period. In the third quarter, Tesla reported production of over 365,000 vehicles and delivered over 343,000 vehicles. According to Tesla, it is becoming increasingly challenging to secure vehicle transportation capacity at a reasonable cost as production volumes continue to grow. Tesla explained that in Q3, the company began transitioning to a more even regional mix of vehicle builds each week, which led to an increase in cars in transit at the end of the quarter. Barron's recently released an article titled, "Good News for Tesla Investors, the stock is now oversold." Barron's is an American weekly magazine newspaper published by Dow Jones & Company, a division of News Corp, and covers U.S. financial information, market developments, and relevant statistics. It was founded in 1921 by Clarence W. Barron as a sister publication to the Wall Street Journal. According to the article, although Tesla shares have gone through just a brutal stretch lately, which has been painful for the bulls, they might be getting some relief soon. Jordan Peterson, a Canadian clinical psychologist, media personality, author, and professor emeritus at the University of Toronto, said, "Purchase an electric vehicle if you want one, but no diesel-powered emergency backup vehicle or electric power generator for you. Buy some stock in Tesla. That's probably the best bet on that front." Tesla is arguably one of the most innovative companies in the world. The business is growing rapidly as consumers look to electric vehicles to offset rising gas prices. Although Q2 proved to be a challenging quarter for Tesla, the company appears to be on top of things, all things considered. Global supply chain issues and rising raw material costs greatly impacted production, even at the new gigafactories. Production at its Shanghai factory, as well as consumer demand, was hindered by lockdowns as China continued to implement its zero-COVID policy. Despite that, Tesla grew second quarter sales by 42% year-over-year and generated $621 million in free cash flow. Moreover, Musk said the Tesla semi-truck would begin deliveries as soon as this year, and the Tesla Cybertruck should still be on track to launch next year too. Beyond that, a lower-priced EV is expected to be added to its product portfolio as it reduces costs. Tesla's energy segment is also ramping up production. Its gigafactories haven't just increased battery production to support Tesla's vehicle manufacturing growth, the company has been increasing the production of battery storage and solar systems that it sells separately to customers. The below chart shows the comparable growth in the first 6-month periods of the years since 2019. In its second quarter report, the company said it continues to ramp up megapack storage production as customers' interest remains strong and well above our production rate. Awaiting a more detailed Q3 financial report, Tesla has already shared Q3 production and delivery numbers. Although most have been disappointed by this, many are focusing on the fact that Tesla appears to have ramped up production. One sore point for investors, however, is the company's valuation. If, as analysts believe on average, one assumes earnings in the back half of 2022 are 50% higher than the first half, Tesla stock is trading at a price-to-earnings ratio of about 75 based on this year's earnings. On one hand, Tesla is working to bring costs down. In fact, in a recent investor conference, Martin Vicha, Tesla's head of investor relations, said Tesla's cost per vehicle was $84,000 in 2017 and has dropped to $36,000 per vehicle more recently. Continuing that trend will allow Tesla to get into the lower-priced EV market, which should help create mass penetration for the EV sector. Furthermore, Tesla recently filed documents saying it's evaluating the potential to build a lithium hydroxide refining facility on the Gulf Coast of Texas. That would be another way to streamline its supply chain and control costs. The company said commercial operations could begin by the fourth quarter of 2024 if the project moves forward. That could also help Tesla benefit from incentives included in the Inflation Reduction Act. The new law already gave Tesla a boost, as it resumed some tax credits that had expired for consumers buying new EVs. Tesla was well past the previous limitation that ended those credits after a manufacturer sold more than 200,000 vehicles. Lower-priced vehicle models and more of its supply chain based in the US will also help meet its eligibility requirements. That said, experts believe that the future looks bright for Tesla. While a PE above 70 is an extremely high valuation, if the company continues to grow at or near 50% for several more years, that won't seem so rich. For investors looking years or decades down the road, buying Tesla right now could make good sense. Go to Moomoo to see exactly how Tesla stock will perform. Link in bio. Looking over the long term, bullish investors place their hopes on fully autonomous vehicles. While dozens of companies are working toward that end in one way or another, Tesla's lead is difficult to surmount. Tesla's use of cameras, radar, and GPS has been advancing for years to the point that Tesla vehicles are practically self-driving. According to Goldman Sachs, Tesla stock is a big buy. In March, Goldman Sachs picked Tesla and several other EV-related stock to play a greenflation trend and rising oil prices. The bank's analysts give most of the stocks a 50% potential upside or more. In fact, according to Goldman Sachs, electric vehicle innovation will continue to drive growth for investors in 2022. As early as 2016, Goldman Sachs said it was time to buy Tesla stock. In 2016, after 3 years of saying just wait for it, Goldman Sachs said that it was time to go in on Tesla Motors. In the said year, the investment banking giant upgraded its recommendation on the stock from hold to buy while maintaining a price target of $250, which sent Tesla shares up in early trading. Before that, the last time Goldman gave Tesla a buy rating was in February 2013 with a price target of $45. Goldman Sachs analyst Mark Delaney believes that there is more upside to Tesla despite the stock's rise. Delaney's take comes after a meeting with Tesla's head of investor relations, Martin Vicha. In line with that, Delaney set a price target of $333.33 with a reiterated buy rating and assumed a plus 22% stock price movement. Even after Tesla released lesser than expected production and delivery numbers, a Goldman Sachs analyst maintained Tesla's buy rating and said the company will continue to benefit from the long-term shift to electric vehicles. Even Emmanuel Rosner, a Deutsche Bank research analyst, was more bullish on Tesla overall. The firm is maintaining its price target of $400 per share and views Tesla as one of the most attractive stories in the auto sector. Make sure to subscribe to this channel for more Tesla stock updates.